Today we are starting topic 11, and as you see on your course page, this deals with posting. Posting is nothing new to you. You've done a lot of that in semester one with the general journal, posting to the general ledger. This will be very similar, but I want to point out a couple of little differences that you need to remember. In topic 11, you will be doing posting from not only the sales journal. On your screen you see a sales journal for the Ace Electronics Incorporated company. We will be posting from sales journals and also from the purchases journals, cash receipts journals, and cash payments journals. So the process will be the same for all four of those journals, and we'll use this as an illustration. On your screen you see a number of things that have already been journalized and posted, and we'll walk through some examples here to make sure we're clear on how this is done. If you look at this, all of these transactions are dated January 4th, and in many companies, the store or the company will make many transactions in a single day, and this company is no exception. So the posting will be done at the end of each day typically. Because there are so many transactions, we want to make sure it's done in a timely manner. A general journal, again, is too cumbersome to use. This will save time and make more sense in a company that does so many transactions. So, journalizing you've done before, and here's an example. January 4th, first one is John Smith. His source document is a sales invoice. We abbreviate S76. And we'll come to the posting reference in a few minutes. And you see the transaction here. And I want to remind you how this works. The sale is $44 for John Smith, but he owes us more because he owes us not only the sales amount of $44, but also the sales tax on that sale. Now, we don't have the money yet. He owes it, he charged it, but we expect that he will be paying us a total of $46.53. And eventually we will have to pay that sales tax on his behalf to the government. And we'll talk more about how that's done later, but we need to be able to compute this. Many times in problems that you will be having, you will have to compute the sales tax. In this problem, if you look down here on the journal page on the screen, you see the sales tax here is computed at the rate of 5.75%. And that could change depending on the locality, but we're using this amount for this problem. And remember, 5.75% decimal form is 0.0575. Let's make sure we understand how this works. If you were not given the sales tax, you need to figure it, and it's a simple calculation. In this case, the sale is $44, and let's look at the calculator over here. If I multiply that times 0.0575, you get exactly $2.53. So that's what you see on the journal page. Adding that to the sales gets the amount that John Smith owes us. Let's take a look at Sally Jones, the next transaction here. Her sale was $25.50 times, again, the 0.0575 equals 1.46625, and we round up. And if, as a reminder to you, this number will always be determining whether you round up or not. If this is 5 or higher, you round up. So this becomes $1.47, not $1.46, as you see on the journal page. It rounds up to $1.47. Look at the next one. Jane Wilson, $75 is the sale times the amount for sales. Whoops, I didn't want to do that. 75 times 0.0575 will equal, in this case, 4.3125. This digit, again, is less than 5, so we keep it at $4.31. So keep that process in mind as you figure sales tax. In this case, it's all done for you. One more reminder, these, again, are all sales on account. These are all charge sales. If we make cash sales, they would not be put in here. They would be put into the cash receipts journal. So we'll see that later. Okay, let's look at posting. At the end of the day, we need to post. First thing we post typically would be the totals. The total of all the charge sales, including sales tax, is $489.37. This adds up all of these numbers. So that's posted to account 102. If you look at the bottom of the page, you see tabs, and the general ledger will show accounts receivable, account 102, the date. The reference column is SJ1, which means sales journal page 1, and you see the debit put in there. And back in the journal then, the 102 is put at the bottom, meaning that has been posted. Sales credit, the actual sales itself, all of these sales add up to $462.75. That's posted to the sales account in the general ledger, and you see that done. The date, SJ1 again, sales journal page 1, and the credit, sales increases on the credit side. It's a revenue account, and you should be well aware of that by this time. And so the account number 401 goes back right there underneath the total of sales. Sales tax payable is a liability, and again, the total of all of those sales tax amounts add up to $26.62, and it goes to account 205 in the general ledger, and you see it down here. Sales tax payable is a liability account, and you know that any liability increases on the credit side, and we see it there, the debit, sales journal page 1, and the credit of $26.62. Eventually we have to pay that, typically quarterly. At the end of 3 months, we pay to the state the amount that is shown in this liability account. All of this money came from, or will come from, the creditors once they pay us. And the 205 put back here into the underneath the total of sales tax payable credit. So we don't do these individually to the general ledger accounts. We use the totals. But we need to keep track of each individual customer as well. So John Smith has an account in the accounts receivable ledger, and we find John Smith over here, and you see the date. Again, it came from sales journal page 1, and we debit his account. So that is an increase to his account. So if we look up his account anytime, we can find out how much he owes us. At this point, he only owes us that much money. When he pays us, we will use the cash receipts journal. We would debit cash, and we would credit his account. If he pays the whole thing, we credit $46.53, and it balances out. It balances out to zero. His account 102.5 is put into the posting reference column. The same way would be done with the same thing would be done with Sally Jones, Jane Wilson, and so on. And we always are posting this amount, the total amount that they owe us. Now, John bought something for $44, but he's going to have to pay a sales tax, so he owes us that much. That's what goes into his account. Likewise, in Sally Jones, she owes us a total of $25.50 plus $1.47 sales tax, and that will go into her account. And we'll find her account, Sally Jones, the date, reference, and the fact that she now owes us the $25.50 plus the sales tax, owes us a total of $26.97. So that's how that works. We just keep going down. Jane Wilson, Michael Mitchell, Sam Rodriguez, and Julie Anderson the same way. So all of those are posted to the individual subsidiary ledger, and that's what this ledger is called, a subsidiary ledger. There's also another one, another subsidiary ledger called the accounts payable subsidiary ledger, which would list creditors, people we owe money to. So we're not doing that in this problem. So two more things I want to show you in the accounts receivable ledger. We talked about sales discounts. And if we had offered a sales discount, let's say to Julie Anderson, we could put that in this column, the description column. So if we gave her terms of 210 and 30, remember what that means. If she pays us within 10 days, she gets 2% off. And we'll show how that works a little later with posting, but you've done it a little bit in topic 10 with the journalizing. So this is where that could be shown. It's a reminder to the bookkeeper or the accountant that this customer is offered terms. Now, it would not necessarily mean that Sally Jones or any other of the customers were offered the same discounts. It may depend on the customer, may be something that we offer to everybody. But this is where we could show it to keep track of that. The other thing I want to point out is these are typically in numerical order. These happen to be, I believe, in alphabetical order as well. But if we get a new customer, let's say we have Jack Adams as a new customer. Well, his account would be 102.7, the next one in line numerically. So it wouldn't necessarily be alphabetical after a while. Not a important item, but something that we need to keep track of when we get larger numbers of customers. So at this time, I would ask you to return to your course page.